Hello and welcome to our preview of the Bank of England Super Thursday. In terms of what we'll be looking out for from the central bank, we're expecting their rate decision, their minutes, quarterly inflation reports and the press conference from Bank of England's Carney. In terms of the rate decision itself, it is expected to remain at 0.5%, as has been the case for a number of years now. However, what comes into more focus will be the quarterly inflation report particularly, and also to an extent the vote. The vote currently remains at 8-1, and in recent times the suggestion has been that any change to the vote would be to perhaps a 7-2, with Forbes tempted to dissent as well, voting for a rate hike. However, comments from Forbes over the last month have had a more dovish slant, suggesting that the labour market is not quite ready for a rise in rates. So as such, if there were to be a change in votes now, it's more likely to be a 9-0 if McAfee decides not to dissent anymore, or it could even be an 8-1-1 where one of the more dovish members such as Vlichi or Haldane in fact decide to vote for a rate cut. Interestingly, according to a number of analysts, they do suggest that the Bank of England find themselves in a quite difficult position where they have to warn against the current market conditions, but they also have to try and correct the market, which at the moment is pricing in a rate cut before a rate hike, which is not what the Bank of England are trying to project. So they need to somehow have a hawkish rhetoric, but also warn about the current concerns. There are a couple of ways in which they may do this. In terms of the quarterly inflation report, they could raise the long-term inflation forecast but cut the short-term inflation forecast, or they could raise the forecast but still have dovish rhetoric coming out of the minutes and out of Bank of England's Carney during its press conference. So a few things to look out for, how these things are broken down. In terms of a market reaction, given the recent softness that has been seen in sterling, many suggest that there could be a case of some short squeeze in sterling, given the fact that it will be quite hard to provide a dovish surprise. As many suggest, the BoE's rhetoric has already been extremely dovish of late. However, if the BoE are particularly dovish and do manage to provide this dovish surprise, you would see a flattening of the curve, some upside in equities and some more softness go through sterling. However, if the Bank of England do come across as slightly more hawkish than they have done previously, or do upgrade the forecast to either inflation or GDP, you could see the opposite reaction, where upside would be seen in sterling, a steepening of the curve, but some downside in equities. I wish you the best of luck trading the event.